Welcome to the Daily Intelligence Brief from IntelStor for the 31st of March 2025. In today's top renewable energy news, India has been investing heavily in the development of its renewable energy sector in recent years to support a green transition. While the government has repeatedly called on the international community to support its transition with funding to little avail, the state has financed a wide range of renewable energy and clean tech projects. Current estimates suggest that India will have to spend roughly $100 billion a year, or 2.8% of its GDP, to achieve its net zero target by 2070. Denmark is willing to take on greater risk in support of offshore wind development abroad. The supplementary funding approval inscribed in last year's Danish state budget was voted through unopposed on Thursday. The approval relaxes the rules for when the state-owned Green Future Fund of Denmark can financially support the billions issued by the Export and Investment Fund of Denmark, especially for offshore wind projects. However, one market where they are rethinking capital deployment is Taiwan. After providing credit of €2.2 billion for offshore wind projects in Taiwan involving Danish companies, Denmark is looking to redeploy capital in markets that are more promising for offshore wind development, such as South Korea. Last year, our wind farms supplied a third of Ireland's total power consumption. But wind energy could provide enough electricity to exceed their domestic demand by 2030. By 2050, Ireland could supply as much as 2.5% of total European electricity demand, becoming a net exporter of clean energy. This scenario would see 20,000 new jobs in the wind energy sector, initially in installation and later in operations and maintenance. Energy provider Eneco has decided not to take part in a new tender round to build a wind farm 50 kilometers off the coast of IJmuiden. Eneco chairman As Templeman said, quote, "The demand for green energy needs to be stimulated more, and this has to translate into higher prices. Otherwise, we cannot earn back the cost of wind farms. It has become too expensive. If the Dutch government does not change its strategy, I find it hard to imagine that we will bid for new wind farms. We see much more attractive options abroad." With the rapid increase in wind power installed capacity, the gap in wind power operation and maintenance talent is widening in China. Li Guang, president of North China Electric Power University, said that the unique regional characteristics of wind power have led to an increasing concentration of wind power talents and positions, mainly in the three northern regions and coastal areas. According to the forecast of the North China Data Center, with the annual growth of wind power installed capacity, the annual shortage of operation and maintenance personnel is between 10 to 20,000. You can learn more about all of IntelStor's market and sales intelligence offerings at www.intelstor.com and subscribe to our channel today.